everyone. This is Kim Schmidt with Farm Equipment. Welcome to our latest episode of the Thought Leaders series. Today we are with Marc Johnson, the market champion for dealerships with Keiko ISA. Thanks for joining us, Marc.
Thanks for having us, Kim.
So first, I guess, for anyone who's not familiar with your guys' firm, can you just tell us a little bit about what you guys do before we get into the other questions?
Oh, sure. Keiko ISA is actually, as a firm, one of the leading, by size, accounting firms in the country for agriculture. So most of our firm deals with the producers and the suppliers for agriculture, and then the niche I serve, obviously, is equipment dealerships. Most of them are farm equipment dealerships, and but we have several. Just because of the familiarity with the industry, construction dealerships as well. So there's about 400 people in our firm. So we're a pretty big firm serving a pretty broad market, literally coast to coast, and just focusing on the agriculture market and all that goes with it.
Okay. And you guys deal a lot with mergers and acquisitions. So I wanted to talk to you a little bit about some of that M&A action that might be going on right now. So my first question was, how does something like coronavirus pandemic and things like that impact the M&A market for farm equipment dealerships?
Yeah, coronavirus is like any other economic interruption. It interrupts both the supply, you see factories shutting down, which then eventually affects the supply of what we can sell. But it also affects the demand of what our customers are doing, because an uncertainty that something like coronavirus causes, uncertainty just causes delayed buying. Nobody wants to part with their cash when they're not sure what's going to happen in the next few months, or when they look at their stock market portfolio and see that it's decreased, 20, 30%, sometimes overnight. And so people just want to hold on to their cash and they don't look at that. So for the most part, it just causes a delay. Although with that said, we closed 2 mergers during the coronavirus, which felt a little weird at the time because we had to do due diligence and things like that in ways that we hadn't done before virtually, and not being able to look at every single parts bin and understand what's there. But what we did close them. So, as I think about that, it probably affects mergers and acquisitions in 3 ways. One is determining what timing should be. When should we plan on this merger, this acquisition closing? Because it's usually it's a 3 to 6 month process. When you start a transaction like this, and 3 to 6 months out from today still feels very uncertain, particularly when you hear the government saying, we could have a resurgence in the fall, and which would be just about harvest time for most of our guys. And so, it just feels like when would we possibly pick a closing date for timing that wouldn't be impacted? And probably you won't find one. But it also, what date to value the company, because at some point you got to cut off a rolling 12 period to see, what's my sales history, what's my EBITDA history, and all those kind of things that lead to value. And so understanding when to cut it off. Do I cut it off kind of prior to when we thought the coronavirus hit its impact, in March or April, or do we cut it off like right after it starts getting back to normal? Or, when do you figure out? And the fact is, at some point, most of our dealers right now, their rolling 12s are actually up through April, and some of them even through now in May. And so the cutoff is a little funny. And then, I talked about the timing of the closing process itself also, is understanding how we're going to do due diligence. Due diligence is always going to involve interviewing the other people's team, understanding, do I have all the slots from a management team? Is this going to be easy to integrate? Do we have any holes? That kind of thing. If you're not allowed to, if you got a social distance and you can't interview all those people, that's going to be a little bit difficult, as well as getting in the stores and verifying that all the inventory is there and all the fixed assets and all that kind of stuff are there. So the timing is probably the biggest one. And one of those is even the banks. If you're going to have to finance this transaction, the banks right now are so inundated with making their PPP loans and figuring out forgiveness and all that kind of stuff, that your little $1 million or $2 million that you need to borrow to kind of tide over the cash flow for your merger acquisition might be an inconvenience for them, so to speak, at the time, as well as the interest rates are so low they're not going to make any money on it. So the banks are also a weird timing in this. In this time. The other thing is the value. Like I said, we don't know when we don't really know what the impact is going to be to value. You know, we've seen some sentiment reports and stuff like that come out from Farm Equipment Magazine and from Purdue and from Creighton University, you know, that say, yeah, it looks like farmland is starting to be, maybe the value needs to change a little bit. Maybe the rents associated with that need to change. And all those kind of things will eventually lead to a change in the value of a dealership because we're selling less equipment or different equipment. But we don't really know what the impact of value is going to be yet from coronavirus, but certainly it will have some.
Okay. Do you think there'll be any sort of, you know, an increase, a decrease in M&As that are taking place, or
you know, I think there will be a short-term decrease, just from the standpoint of figuring out all those questions I just said.
Okay.
But kind of on the intermediate term, I think one of the things that coronavirus will have done to dealers is make the urgency of succession planning that much more urgent, because they might have some 50, 60, 70-year-old either owners or longtime managers that say, you know what, it's been a good run, but I don't want to go through anything like this again. And then all of a sudden you've got a hole. And sometimes that hole winds up being impossible to fill unless you go to another dealership, you know, and use their resources and come together and that kind of thing. So again, I think it could, you know, we're at a period of time where it has to stay active in the M&A market. I mean, you just look at the age of the owners overall, and there's a turnover coming, and we can't delay it too long. And so I think that overall we'll see an increase from it.
Okay. And then what should dealers be doing now to make their business more attractive to a potential buyer?
You know, I think one of the things is you know, what makes your dealership different? You know, we're all going through something that's probably at best making us flat in sales and growth. At worst, we've had a decline. Hopefully we don't see a decline like we did coming out of 2013 and 14 when inventory got out of control, and then all of a sudden, you know, sales were down 50, 60% overnight. And that really hurt a dealership. So, but everybody's going through it. So what makes you different? What makes you more valuable? You know, and celebrate that. Maybe it's your culture. Maybe it's your customer. You know, figure out how to sell that, so to speak, to a potential buyer or a potential candidate that wants to merge with you, and say, this is what's going to make you or your dealership more complete by adding us. The other is, if you haven't taken the opportunity to centralize your management yet, like say you're still got 2 or 3 stores, but you're managing those on a store by store basis. If you think about another dealer trying to merge your operation into theirs, that's going to be hard to integrate. It's going to be hard to manage. And ultimately, they're going to look at that and say, I'm going to have to be disrupted again when I buy you, or, you know, and my results are going to be interrupted as we try to integrate your dealership into ours. And so make that easy for them. Start that centralized process now. That also will build your team. It'll expose the fact that you've got a really good management hierarchy and succession plan already in place that they don't have to do for you. Because ultimately that brings the value down if they have to spend money to get your dealership up to their level of standard.
Right. So as part of that, it's almost, if you were operating it as 3 separate stores and didn't have that centralized management, the buying dealer would almost have to be integrating 3 businesses.
Yeah, all of a sudden they got to do that work for you and then integrate it into their culture as well. And so if you can have some of that work done for them, you know, as we look at value, in fact, that's one of the things we look at is have you as the dealer, it might be for sale, have you already gone through the steps of paying for succession plan? Do you have, you know, generation 2 and generation 3 and several of those key positions already in place and being trained, or not? And if the answer is not, then that's an expense we're going to have. If you've got a lot of delayed maintenance and buildings that are aging and have some expenses, same thing. We're going to have to spend some money to get your dealership up to a standard that fits in with our culture. So, you know, and there's ways you can do that without just spending money too. I mean, it's getting your culture better. It's moving some positions around. You know, it's not necessarily spending money. It's just doing the things that maybe you put off for a while.
Okay. And those are all things a dealer should be doing to prepare their business to potentially sell regardless of the situation.
Right.
Those are
Actually,
the same things. If coronavirus wasn't a thing, that's what they should be doing.
exactly.
Anyways, right?
Well, and even if they're not going to ultimately sell, whatever they do in that is just going to prepare them for more success later. And that's kind of the point, is if you don't wind up selling it, you haven't done anything to hurt yourself. You just moved yourself forward into a different, and then maybe, the longer coronavirus goes on, who knows, maybe you actually inadvertently then positioned yourself better than the guy next to you,
right?
And you wind up being the buyer of him instead of him being the buyer of you, because you've done the things right to survive long term.
Okay. And then for those who are looking to purchase or grow the business, what should they be doing or looking for?
I think the first thing they ought to do is understand what their strategic plan for doing it is. What's the why? Why do we want to take on more, particularly at this time? And when they have that why figured out, then they can understand, okay, now what fits into that plan? For instance, if I have the opportunity to buy a 10-store dealer, is that too much for my infrastructure to handle right now? Should I be trying to maybe look at something different? Or how will I know if I can manage that dealership and their either abundance or lack of people? Do I have the staff to transform that into what I need it to be or not? So if you don't understand your own strategic plan and your own why of why you would get bigger, all you're really doing is you're not setting yourself up for success at all. You're probably just going to wind up spending money and go through a long, painful process that doesn't necessarily yield quick results. So you really need to understand your strategic plan, and then probably get your cash flow ready for that as well.
Okay.
There's, again, the banks are busy right now. They're still loaning good money though, so don't worry about that. But you got to get your balance sheet in a place that, if you need to delay some dividends, or if you need to get some more cash flow into the business to make the balance sheet look right at the time of the merger, then that's what you need to do.
Okay. Those were the only questions I had for you. Is there anything else we might have missed that you wanted to add?
The only thing I would probably add is coronavirus doesn't mean, or these kind of disruptions to the economy doesn't mean just abandon. So if you thought I was going to go through a merger and acquisition strategy later this year anyway for some succession planning or other reasons, this isn't a reason to say it's off. We've got to now push that down the road 5 years. It just means you need to understand it better and talk to some people that have gone through it, really understand what you're heading into. But if the right answer is for you to kind of ride off into the sunset and monetize the value that you put into the dealership year over year, then do it, and don't feel bad about it. Just get ready for it, put the things in place that maybe you don't have there yet, and move on.
Okay. Well, thank you so much. Always a pleasure to catch up with you. And we will see you in August at the Dealership Mind Summit.
Sounds good. Thank you.
Okay. Thank you.